Are you finally ready to get into trading in the upcoming year? You want to kick off 2025 right. You just want to do things, but you don't know where to start. So let me break it down in the simplest way possible so you can hit the ground running. We'll cover the basics, building your plan, and how to stay consistent for long-term success. Now, let's get into it. So, welcome back to the channel. I'm going to walk you through how to get started trading in general and specifically in the upcoming year. I know for a lot of people, 2025 might be it, and we want to go straightforward and simple to follow. But first, let's get one thing clear. I do have to remind you, none of this is financial advice. Most of today will be in general speaking anyway, but when trading with your own money, you must do your own due diligence. Trading can be exciting, but it's also risky. So take your time and start smart. I promise, and I do promise, the exciting part, it fades. It goes away, and it's no longer exciting. Hate to break it to you. They just stay red and green, the candles. They go up, they go down. They go a little bit up, a little bit down, lot up, lot down, and that's about it. If you enjoy this type of content, please make sure to like this video, share it if you could, but subscribe for more market tips and content. If you want access to my charts and layouts that you'll be seeing throughout the video and you want to join my trading community, just check out the Patreon link. It'll be pinned in the comments down below. The first step in general is obvious. You need to learn the basics. Understand what drives price action and how market structure works. Supply and demand, even whatever concepts resonate with you. Stick to one market, stocks, forex, etc. Don't spread yourself too thin at the beginning. I do promise now, I trade all asset classes. So if you come to my live streams, you can ask me a question over or anything: futures, forex, options, options on futures, all the whole world of them. But I perfected, for lack of a better word, each one and then added another tool to my tool belt. And I do think it's better to probably go about that. You don't want to just strain yourself. The best saying I heard was, it's like taking a drink from a fire hose. You just try taking it all in at once. Let's be honest, it's just not going to happen. There are tons of free resources online that explain the basics. For example, my channels, Don Fron Trading and Don Fron Show, have free content to help you understand my trading style. It's just about finding what works for you and sticking to it. This is all about well-intentioned time that is intentional in effort. My biggest tip: train your eye to pay attention to the overall prevailing sentiment of buyers and sellers at certain price points and pay attention to what they're doing in those areas. That's where the magic happens. That's what these zones pretty much are that you're seeing on my chart. You've been seeing me draw these on my streams day in and day out, areas that I have trained my eyes to pick up over the last 12 years. This was not an overnight process, guys. Now, once you have a solid understanding of the basics, maybe you're jumping in on mine, you're trying to draw your own, or you have your own strategy. This next step is crucial. Okay, always have a plan. Okay, 1, why and when you will enter the trade. Okay, 2, when and why you'll get out. Okay. 3, sticking to your plan while the trade is on is important, but pay attention to what the price action is doing while you're in the trade as you accrue your experience in the market. Hence why I implied intentional effort that's well placed. This is all about what you put in, make it count. Okay. Number 4, decide on your setups, your risk size, your rules, the time frame you'll trade that resonates for you. Make it repeatable. Let me give you an example of how I go about it in the market. And also, I'll link the full video in the comments. It will be pinned below. But I'll show you guys like my entry types. Let's just, for instance, right here, it's going to come down to this zone right inside here. You've heard me say a type 1, type 2, type 3. I'll be brief real quick. It's going to come down, it's going to bounce, and it's going to go like that. Buying it right here, that's my type 1. Buying it at these levels, that's my type 2. Now, typically the type 3 is right here. More than likely, it's going to be up here. It's going to fill you a little bit higher because, we're bouncing. A lot of people think this is the safe trade. I personally, you'll see me take the type 1 and type 2 99.99% of the time. Sometimes take the type 3. It's not as safe as people like to think, but maybe that's just me. Again, this is going to be what resonates with you. There are people in my group that only take these trades. They just it's too high anxiety to try to catch that knife. And that will be more important in the long run. Your rules for why you exit or enter a trade could be very different than mine, which is okay. Again, there's quite a few ways to skin this cat. There's just 1,000,003 ways to do it wrong. Now that you have a plan, it's time to get started. This is even more useful in the upcoming year. Okay? Start small, stay in the game. That's what I would do in 2025. I think 2025 could be a rough year. It's going to be a great year for people that will end up buying and holding. Anybody buying at peaks, anybody that is over allocated, as in they bought too much, I think you're going to find out. And a lot of times they don't find out until things come down. When things come down, they start seeing that red number start to stack up. That's when people get anxious and they start to have their emotions trade for them. And it's just not going to be it. Now, like I just showed you, let me bring this back up. So right here, now I would go, this would be like a long set, this particular trade right here. I would go long right here. Okay, type 1, type 2, whatever, middle of type 3, whichever one of these is where my entry would be at, Okay, let's just pretend I got in here. Now my stop loss would be below these wicks. That's going to be my reason. Okay, if your reason was because Wall Street Bet said it was going to, your wife's boyfriend had a hot tip, whatever the reason was, you put this line at where that story is no longer the case. Hey, everyone on Wall Street Bet said this was not going to break. Your wife's boyfriend said, no way it breaks this. Fine. That's all good and well. If it does, that's where you get out. Because clearly he's wrong, you're wrong, Wall Street Bets is wrong. That's where it just didn't go in your favor. That's fine. This is part of the game. You're not going to win every one. By you staying in and just going all the way down tells me you believe yourself, you're going to be 100% right. And I guarantee you've never met a trader that does. So the entry is important. The exit, I got to say, that's where having that plan before I haven't mentioned the price. I haven't mentioned anything else other than I like this area, but this is where the story's wrong, and that's where I'm getting out. Okay, that's what's important. And now we could take this 542 to 537. That's $5 a share. Okay, if I don't risk $20, I can only buy 4 shares. That's where most people get it wrong. They just buy with some random amount. They have $5,000 in their account, so they just toss $5,000 in there, and they just roll the dice to kind of see where it's at. That's not how it's done. The making money, let me tell you something. This is the easiest money you'll ever make in your life. And I mean, by far, hands down, you just can't compete. It will be the easiest money. You're going to click your thumbs a few times, poof, money's going to appear in your account. That's not the hard part. The hard part's going to be keeping it, managing it, making sure you don't give it back. And as you trade over time, you'll see. It's great to have trades that pan out like this. All right, but if you want to buy the continuation, imagine not stopping out. What if that was the trade? It's going to rally, it's going to base, and you think it's going to continue? You're wrong. You're going to watch your money just go down that far. And what if it doesn't reverse? Okay? Have all that figured out before you ever start clicking any buttons at all. Here's a quick link I'll put in the description, right? Emergency savings bank rates. Let's talk about this for a second. 2025 is here. If I was brand new, how to go about this? I'm not going to make the assumption that everybody has money just sitting around, and that's what this article is talking about. There was a stat back in 2023 that pointed out only 44% could afford a $1,000 emergency. How crazy is that? If that's you, that's wild. I don't know if I even blame people. It's what drives me more to even be on here, to even explain and go over all this. This stuff, it just isn't taught. There's a lot of people that are just afraid, right? You get the urge to get in the market probably one time. And if you follow just that wrong person, you're out just as fast, if not even faster. And then you're never back. And this is going to be what I think one of the best access, the best vehicle to turn your $10 into 20. I'm not saying you're going to double it, but to have your money grow and work for you, this is one of the best. Sure, you can watch a seminar about how somebody flips other businesses. Go jump right in. Anyway, we're not going there. I'm going to keep things a little more realistic, so it's a little more helpful for the majority. With that being said, I would attack it like I did my growth account. It's an account I started with $0, but then I put in $150, and I did that weekly because that was the average car payment. So how much can you put in there weekly, bi-weekly, monthly? Aiming for like 1 to 10% of your income. Just keep it consistent. Start now. I don't know if I would even apply it right now, but apply it. I mean, like buying anything in particular. Just get the cash in there. I always found it funny when someone like, "Hey, I opened a Roth IRA," because that's what everyone on TikTok kept saying. My dad always said it. Your parents, they always said, "Open a Roth IRA," and then that's cool. You open the account and you just put your cash in there. It doesn't go anywhere. That's just because you still have to invest it. But in this case, just get it in there. Get that faucet steady drip of money being deposited. I've talked about this previously. I would focus on making sure I did not pull out any money from the account. Don't pull the money. It's like the dam rupturing, right? The second you do, there, man, that crack just gets bigger. It's a dangerous habit. That's why I said 1 to 10% of your income. So you're not putting yourself in a bad position. You're not just putting it in to take it right back out. I call it gas station money. Like money you put in your gas tank. No one ever questions where it gets burnt up, is what it does. But no one's ever like, man, did I get the best mile per gallon? Where did all my gas money go? Like, you drove, it's gone. You're not going to the store asking for your money back. Uh, that's the mentality of putting that money in your account. Just open the brokerage account, start depositing the money. I've said before, put the money into SPY and delete the app. Check back later. Way better than just putting it into a savings account. Historically, you'd have killed it. If you put money in SPY from 1924, who knows where your money would have been? I could probably pull it up. I do know where your cash would have been. 99% gone. Okay. But getting started is the most obvious thing to do. Just to do that, you need to make the intentional effort to get the capital started. I'm saying that even with a crash I'm anticipating next year. I've said it's coming in March. 2025 would be the year I'm trying to accumulate shares. That is my focus. I've been doing this 12 years. If I was still brand new, I'm going to accumulate everything I can. I don't care about I'd try to time the best I could, get the most shares, get the best bang per buck, but I'm buying the shares. That's it. That's my focus. Again, I'm not worried about account balance. I'm more concerned about how many shares I can get. You've heard everyone say this, and I don't know why traders repeat it, but next year is going to be, not next year, this year, it is the year. Be greedy when people are fearful. You've heard that being quoted a million times by the good old Warren Buffett. Okay, but this is it. I would learn as much as I can about the markets. You can come to my streams regardless if you've applied a single dollar into the markets. And I mean, put the money in the account. Don't buy a single thing. Come to the streams and start asking questions. Anything. You'll get the repetitions, and you'll start to learn the language of money, more importantly. And that will clear out a lot of just the anxiety in general. Just watch the stream, stay plugged into the markets. You'll start noticing characteristics, how things sell off, push up, hype up, what panic actually looks like. It's like fight camp. You start picking up on your opponent's right hook, uppercut, and his footwork. You'll match it to the T, and you'll be ready. If I had to buy something, it would just be SPY, I guess. That does beat the savings account. It really does. Why I sometimes hesitate that is because the second people do apply that, it's kind of like the gun going off at a track meet. They feel like they got to do something. They got to be a super trader in out. And if you can do that and let it go, your money's probably going to go down. Okay. It sounds kind of counterintuitive. I know. But on the bounce back, those are some of the biggest days in the market. It's more important to even be in those. You try to time it later, you'll miss the down. You'll probably miss the up as well. If you're going to take that route, put it in SPY. That way you can think you're doing something. You'll still collect a dividend. You can learn about that. Ask questions as to why this money just randomly showed up in my account every 90 days. But I would do that while you're learning. Historically, it's panned out every time. It's not about making money right away. Learning how to lose while keeping your head in the game will be key. Start small, build your account slowly, live to trade another day. You've probably heard that before. You've heard me say this. If you want to be here, if people will come on stream and they'll say something kind of crazy, and I'll say, hey, if you do that, there's just a good chance you're not going to be here next year. If those are the habits you're building, I'm glad you were here for the views, but you probably won't be here next year. I couldn't even imagine if I could go into every one of my subscribers and see how many aren't still here. There's been tons that have just come in and then probably just come and left. because I've said that exact same thing, and I guarantee it's safer for me to guarantee that they're not here because they lost everything. Not to say I'm the one and only, but if I've said that to you, you've probably shown off some kind of crazy habit, gambling, very high risk, or just going against the trend, against the grain. You just did it, and I was like, nah, probably not smart. And a lot of people they do just follow that route. As your account grows, you can use methods like I do in the growth account. Add capital weekly, focus on accumulating shares, sell calls against them, generate weekly income. So I do that right now. I'm accumulating UPST in the growth account. I'm going to start adding more AMD. This is what I described in a previous video as offensive investing combined with defensive. In maybe investing or saving, there's just kind of offensive, defensive ways to with your money, continuously adding deposits to build that strong foundation. Small, consistent steps will set you up for long-term success. There are plenty of YouTubers out there that'll go over the high flyers, the crazy ones. I'm not about home runs. Home runs will naturally just happen, by the way, just you being in the market. You play the lottery you play the scratchers every day, you're going to eventually have a winner. That's just kind of how it will be just by being in it. But man, if I could just load the bases every time, every batter up, bunt the ball, get hit with the ball, whatever you got to do, and just go to the next base and just walk them. Keep the bases loaded and just keep it churning. Once you have the basics down and a plan in place, just focus on that consistency. Journaling could be key for you, okay? I don't do this anymore, but I do think it's important because you'll learn a lot about yourself. Journal it, write it down, why you took each trade, how it played out, how you felt during the trade. You'll learn if you're entering these trades too early, holding too long, missing opportunities. When you start journaling, honestly, steps 3 and 4 go hand in hand. Building consistency of some sort while learning the market will be a winning combination. Also, finding a community of like-minded traders. This is me journaling my trades. I post them, when I go live. Already not entertained, sorry, it's 100%. But so here's my journal. Now this is 2 years worth of trades. 2 years. There's 4 losses total. Okay. I guess Palantir was a big one, but not a lot of home runs. A lot of them just base hits going. And everyone in my community, we do a lot of similar things, and that consistency just builds up. I focus on these steps. You'll avoid the trap of jumping, from one strategy to another, ignoring the price action that actually truly drives the market. So there you have it. How to get started trading explained as simply as I could. Remember, this is definitely a marathon, not a sprint, and that couldn't be more true. You sprint, you're going to be gassed out. You're going to be out. Stick to the basics, follow your plan, start small, and focus on consistency. I used to say this a long time ago. Someone came in and said, I'm losing every trade. I said, that's the most consistent thing I've ever seen. That's crazy, because now all I got to do is one trick. We got to flip one thing, and you're going to win every trade. Whether you're losing every trade or winning every trade, I promise, if you're losing every trade, we're going to flip that thing around, and you'll be winning every trade. Consistency will be the most important thing. The more you can start fine-tuning things, this is the part that sucks, 'cause that's where it gets boring. But when I say you're going to tap your fingers a few times and more money just poofs in your account, it's wild that more people don't do this. You'll start to see that more and more each week. If you found this video helpful, again, please like and subscribe for more market content. Don't forget to check out the Patreon link in the pinned comment below for access to my chart layouts and that trading community. But also, make sure you watch my previous video on investing habits that might be keeping you poor. It's packed with tips you don't want to miss. So thanks for watching, and I will see you guys in the next one. Have a good one.